we are officially live right now. So I'm gonna wait a couple minutes to let people join in here. We tried to start this at 7:30, and I have no clue what I am doing when it comes to this YouTube live. I thought I did, but what I thought was not exactly what was going on. So this is gonna take some practice, a little bit more research, in order to get this going correctly the first time. So I look forward to January being a much better result than what we got going on right now. But I'm going to be patient and let some folks join in. The only way that I think that I can do that is on my phone. So I will be attempting to chime in via my phone. But this is what we do every single month. Normally I'd be doing this on a Zoom and this would not be recorded. But I had a very good suggestion in order to run this on YouTube Live. And so here I am, following the suggestion. And this is a direction I wanted to go anyway, so it does fall into what I would like to do for the future and continue to run these on YouTube Live every single month. And what we do every time is we just look at the charts, and if you do subscribe to this channel, this is what you will see every single week, where I do 4 indexes. I look at each one of them, and then we sprinkle in hip-hop. I got a hip-hop quote every single week that mixes in finance and hip-hop together, and what it does is it proves to you that hip-hop and finance have always been together, and I prove it to you weekly with lyrics from the past as well as right now, that hip-hop and finance, hip-hop and the stock market, hip-hop, whatever you want to call it, with money has always been together. We have been the major influence to the entire world when it comes to money. And my objective is to tie that into every single week and prove that to you. So let me log in with my phone, and then I can at least see if anybody has any questions in there that way. But I do truly appreciate you coming in to this chat tonight. I got a generic chart right now. All right, let me turn this up. Check 1 2. That over here. Okay. All right. Yo, it's 7:48. We're going to get this thing moving here as people continue to join in. Any questions that you may have, please save those for the end or after the analysis. I can address your questions then. We have plenty of time on our hands tonight in order to look at the charts. So first things first, let me take this off. First things first, we look at the S&P, then we look at the Russell, then we look at the Dow, and then we look at the Nasdaq. Once again, make sure you hit subscribe. We do this every single month. This will be a monthly occurrence that happens here, where I do the same 4 indexes, and then we talk about whatever stocks that you have to bring to the table. So come with your stocks. We will read them live. I will give you price targets, and I will show you how I came up with those price targets and teach you how to read charts with simplicity every single month. All right. So now let's go ahead and take a look at what we got going on. SPX. All right, this is the November analysis. We're going to look at how November played out, and then we're going to look to see what we can predict for December. So right now I have a monthly chart up for S&P. S&P is right now $4,569.78. Last month was off to the moon. We ran high and we ran hard, and we closed towards those highs. And if you know anything about charts, usually when you close on the highs, the chances of continuation are pretty good. And we did just that. So I am anticipating that the month of December will continue to move higher. I've looked to see that the market continue to make its move higher. And if you've been watching the videos, if you haven't, make sure you do that after this. We've been talking about this cup and handle pattern. Last month when we all met, we also highlighted this very same pattern, and we were looking for a specific price for this to close above, for this in order to take action. And right now we're pretty close to it. 4,600 is the ideal price target right now that we are keeping an eye on for the S&P to finally make its move above. If we close above this neckline, we can have a really strong chance of a breakout in the bulls to continue to run in order to make new highs. The reason why I'm saying we're waiting for that close above is because that is going to signal that pattern for it to continue to run higher. I would not get in unless you have that confirmation. The patience will be rewarded. So wait for that close above 4,600 for this to play out. And once you have that, then you have a good chance of making some pretty decent money. On the downside of things, if this pattern does not form, bullish patterns that are not fully developed are automatically the opposite, and they are bearish formations. And if this does not get its close above that, you will look for a very fast move to the downside. So we are watching for that 4,600 in order to be the line in the sand. Monthly chart looks pretty good. Weekly chart is going to coincide with that more than likely. And we see on a weekly chart, we have my indicators showing that we are oversold and looking to continue to move higher. We're facing off against resistance currently, but again, this is that neckline on that cup and handle pattern. This is the cup. Here's the handle. Once we have that confirmation above here, we will likely have continuation to the upside. So both the weekly, both the weekly and monthly align for a bullish movement to the upside. I'm looking for that continuity to happen for the S&P for December. So look out for the end of this year for the Santa rally to continue to move higher. S&P is officially done. IWM. So before I talk about this one, I am 2 videos behind right now, and when I get back in town, hopefully I can be able to get at least another video out or to catch up. I was working on that before I left, but I am 2 videos behind right now. I recorded the last one before I left, so I have to edit that, but eventually I'll get caught up and be on time with what we're doing right now. So bear with me. The video that's out right now was actually recorded the second week of November, and we are catching up slowly. But right now, IWM is at 186.89. The only reason why I bring that up is because the videos that I've done have showed that I was looking for this aggression to happen in this zone. The most recent one, I talked about how we're in this volatile range. I'm going to go back to the monthly chart in order to be consistent. Monthly chart right now is showing that we've had another bounce off of this support area. We talked about this last month too in this discussion, that support area, every time it has gotten there, it has bounced and gotten to around that 190 to 200 area. And I've also covered that in the videos on YouTube. 190 to 200 right now, because of that, is the price target, and we are off to a great start to getting there. We have a bullish engulf signal right here on the monthly. right off of that same support area that it has bounced off of. At least 1, 2, and in the past this has been the signal for a move higher to where it got up here. So I'm looking for that to continue, and I'm looking for IWM to make it to that 190 to 200 area. And right now we're off to the races for the month of December. Only 4 days in, and it is hot and continuing to move higher. I brought this up in the last video, recent video that will probably come out 2 weeks from now at this rate of my editing speed. I brought this up because this is an area of volatility. Now the monthly is showing that we're starting off hot. Once you take a look at the weekly chart is going to show you why I have said that this is going to be a volatile area, and that every time when the price is in this area, it moves fast. Between 180 to 190, you can see this is in that area, very fast moves. This is in that area, fast moves. This one is in that area, also fast moves. Every single time we are in this area between 180 to 190, you see the price does not stop moving. It goes straight up or it goes straight down. And this is what the definition of volatility is. Every time it is there, you've seen it play out multiple times. In this area, straight down, straight up, straight down, straight up, straight down, straight up into it. Most times it does not pause. It continues to move anywhere between 180 to 190. So I expect that to continue to happen now, and we are doing that right now. 186.89. And I think that this will continue to move in order to get to 190 before it finally slows down. So that's IWM in a nutshell. Right now, we're looking to see if we can rebound and get back to that 190 to 200 area. Next on the list is the Dow. The Dow right now is, wow, very close to its record highs right now. It finally pulled back a little bit today, 36,204. Monthly chart is where we will first look at things. Monthly chart right now. We closed at the highs last month, and as I pointed out at the beginning of the video, that if you close at highs, chances of continuation are pretty good. And we are in that continuity phase right now, only 4 days in to the month. I say 4 days in. This is really only the first day, well, second trading day in December, and we've continued to move up, even though today was a little bit of a slide down, but that's all good. Right now we are continuing to move higher. 36,000 is where we're at. Record high is 36,952.65, and we're not that far. I do think that we're going to continue in order to make that move. We can see this range has been broken. We're back into the range where the high is, so I'm looking forward to continue to play there. We zoom in closely to the monthly chart. Monthly chart right now is showing that that cup and handle pattern is actually in motion right now. The neckline of this cup and handle is playing out right now before our very eyes. We have this cup, the handle played out, and now we have closed above that resistance area. So I'm looking for this to make that continuation. I'm looking for the Dow to push and make record highs before the end of the year. So watch out for the Dow. It's on the move. Lastly, let's go ahead and check out what's good with the Nasdaq. Nasdaq 15,839.67 as things played out today. We ended up down almost 1%, which is all right. And we have, once again, family cup and handle. We're on a weekly. Taking a look at the monthly chart. Monthly chart is showing that very same cup and handle, but in a very strong formation right now. Pretty solid cup and handle, textbook. This could continue to move higher, and techs have a really strong shot right now of pushing to the upside. We don't have the official close above that neckline yet because it is right. Oh, I don't have the right tool, but it is right here. Right around this area here is where we're looking for that cup. Actually, I can slide that down. Remember, these resistance areas are arbitrary. Wherever you put yours is okay. I'm looking at this to line up with this area here. That's because I have this candle, and then these candles all touch around that same area. So because of that, I'm looking to draw my line pretty close to that area. Once we have that close above that, it's going to be the same as the S&P and the Dow. That cup and handle pattern looks pretty strong in order to play out. And if it does, then the techs have a very good chance of moving to the upside before the end of the year. That's the monthly. Weekly chart is going to coincide with that, where we see cup, handle, and then right now we see a slight pullback just based upon today. This week, we're going to hopefully look to see a very strong move to the upside. So I'm looking for strength. Strength is the name of the game. I think volatility will come back into the market. IWM is going to be the driver, in my opinion, because bull markets need small caps in order to participate. Because once investors start taking that risk on, markets move higher. So all four indexes right now are still showing strong signals of pushing to the upside. We have a strong chance of getting to record highs. We're pretty close to them right now, and we're watching for the cup and handle pattern to develop on the S&P. We have it developed right now on the Dow, and then we're also looking closely for the Nasdaq to develop that cup and handle on its chart. IWM is bouncing off a strong support area and is in a very strong area of volatility. I'm looking for that to return back to that 190 to 200 area. If things get really good and we break out above 200, that next area above 200 is another area of volatility, and that is between 200 to 220. That's a very strong area of volatility in the past, and I think that will repeat if we do get above 200. So now let me take a look at what we may have for any questions currently. Yo, thank you for everybody who's in here right now. Like I said, I appreciate your patience with me tonight. We were supposed to start at 7:30, but it's not technical difficulties. I got everything set up. Everything's working just fine. It's just I have no idea how to share this at all. So once I do learn that and do a little bit more research and talk with other people who've done YouTube lives on how to properly share the link so people can get in and I can share this, then the next one will be a much stronger success. Right now I don't have any questions in there, but I will bring up a stock that I've talked about recently on the podcast. If you're not familiar with the podcast, it is Stocks and Bars, and every episode on there I talk about stocks and hip hop. Everything that I do is stocks and hip hop. And on Stocks and Bars, what I do is we talk about a financial topic. There's usually some hip hop music playing in the background. I also DJ. If you listen, all the mixing in the back, that is I've done that. And then of course all the raps, that's me too. So I do love doing that as well. But one stock that I have brought up on there is Verizon. I brought up Verizon before. It is one that I am personally invested in. And the reason why that I like Verizon, I'll give you a glimpse into how I read charts. First things first, I told you before, I start with usually my weekly, but in this case I started with my monthly. And that's in order to show you that you want to see the biggest picture that you possibly can see. Zoom out as far as you can in order to see the entire chart, all the price action, to see the type of action that happens at specific prices. So when it comes to chart reading, a lot of people get intimidated by the word technical analysis, chart reading, all of that. But I want to break this down to you to let you know how simple it is. All we are looking for is how a price has reacted in the past. A price is very triggering, and you need to understand that whenever you see a specific price, it has a history somewhere along the line. And at Verizon, right now we're at 38.04. We had its first down day in a while. I want to point out to you this area here. Okay, we're pretty close to around that $30 area. We're just going to round to 30. So what I do is I look and I say, okay, what was the last time that Verizon was at 30 and what happened when it was at 30? You notice right now that we are currently on the weekly chart. I'm going to zoom out further because remember, I want to get the biggest amount of data that I can possibly get in order to make a decision. So now that I have that, I have 20 years of price action in front of my face in order to help me identify what has happened at 30 before. So when we look at 30 in the past, we're going to notice that if I just take this line, all I got to do is just tap it once on Thinkorswim, and I can hover around 30. And once I have that, I can just leave it there, and it helps me make a determination. Last time we were around 30 was in 2009. 2009. That's over 10 years ago. So almost 15 years ago now. Almost 15 years ago is the last time that Verizon is traded around this price at $30. If you walked into a store right now and they told you that the price is as low as it's ever been since 15 years ago, you're going to snag that product up. I don't care what it is. You're going to figure out a reason why you need that product. So with that being said, Verizon was on sale. And while a lot of people may be scared because of the business model that they're in right now, I'm not. I like this company. I don't think it is going anywhere. Eventually, the balance sheet will clear up, all of that stuff. But regardless of all that, I don't pay attention to that. I'm looking straight at the chart. The chart is all that I am looking at in order to make this determination. So back to what I was saying about what happened at 30, 15 years ago was the last time you seen this price this low. So what does that mean? What happened? Last time it was at 30, you can see it kind of hovered around there, and before you knew it, it took off. It took off and it got to around this $50 area. You can see it hung around tight for 50 for quite some time. That is 1, 2, 3 years, pretty much 4, 5, and 6 before it made a push to around 60, and then it made its fall lower. A lot of things happened for Verizon to fall down that low. They were something about cable, and I forget. I totally forget. But it was definitely driven about cable and how a lot of the things are legacy, and they're going to have to invest a lot of money basically in infrastructure. And that's probably true. A lot of things right now in cable are going to a newer way as far as fiber optics are concerned. But regardless of that, once more, 15 years. We're talking 15 years. This is a huge discount for a price. I mean, for a stock that has been around, is likely going to continue to be around. And you can see that they give a dividend. I say that like you know what you see. But the green things down here are a dividend. And they've continued to give a dividend, and they've grown that dividend. So I'm looking for that to be a driving force for the big market money people in order to invest into Verizon. So long story short, $30. When you look at it, you look back, you see the last time I was at 30 and ended up making to a 50. So my price target is 50. This is not rocket science. This is all very simplistic. Just looking at the chart, it was at 30, it made a move to 50. So therefore, what I look here is at 30, it will likely make its move to 50. Will it be as this rapid? I don't have any idea, but I do know that it has a good chance of getting to 50. Additionally, when I look at this, you can see that it did it here, and then it also did it around this same time. Last time it was at 30, before that time it was at 30, which was in 2006. It was around 30 and made a price move to, you guessed it, about 50. So I have two instances right there where history has played out to where it's moved to around 50. And then if I continue to move back, we have this move here, which is almost to 40. And then I move back here once more. It was at 30, and then it moved extremely high to around $70. So all of this being said, I'm looking at this to continue to move higher and get to at least $50. That's Verizon in a nutshell. That's why I'm invested. That's why I'm showing you how you can simply read a chart. First things first, look at as much data as you can. Once you have that, look back in the past to see what happened at that price point. And then from there, you can make a determination on how high it could potentially go based on what it has done before. All right, I'm checking it out. Yeah, yo, appreciate you coming in here, champ. Thank you, thank you. All right, AT&T, AT&T. Let's go to that one. I'm biased on that. Everybody who knows when I do this, I do not like AT&T. I don't. I think they are doomed personally. But let's talk about the chart. Right now it's at 1666, and we just talked about how we look at things and see how it looks in the past. So let's check out what $16 almost looks like in the past. Boom, pull this up. $16 before, you can see we struggled, and then we made a move all the way up to 30. Now we're back here again. So based upon that, I said with Verizon, we are at 30. I'm looking at it to get to 50. Now here we have AT&T doing something similar. It's at 16 or 16.99, bounced to 17, but off of this price right here, this is a low that has not been seen since basically 2002, 2003. This is a multi-year low. But why do I not like this stock like I like Verizon? The chart right now is showing that we are breaking down. This is why I don't like it. When I go back to Verizon, I'll show why. This is here a breakdown. We are continually making lower lows and lower highs. When I see something like that, I steer away from it. The only reason why is because it is making a consistent move lower. Lower highs, lower highs, lower highs. These are all lower highs currently, and we're making lower lows. I expect that pattern to continue. Now, that's AT&T right now on a monthly. If you look at the weekly chart is going to show you in 3D exactly what I am talking about. We have lower highs, lower highs, lower highs, and lower lows. Right now we are making what could potentially be another lower high, which will likely be followed by another lower low. And I stay away from that. I stay completely away from that. I like for that to make a base to finally show that it wants to stop bleeding out. So AT&T, I don't like it at all. I still think it's a trash company, period. But the chart right now also shows that it's not in a state that I would like to invest in. And if you want to compare that to what Verizon looks like, Verizon right now, you can see that it was continuous. It also made lower lows and lower highs, but you can see right now that it has also made a high that finally broke that pattern. That pattern is snapped. We've got a very strong bounce off of 30. That is not what AT&T is doing. That's why I like Verizon better than AT&T. The strongest one in the group right now, if you're not familiar with the cell phone stocks, is T-Mobile. T-Mobile is TMUS if you want to follow that. This has been a stock that I've constantly beat the drum on and said this is the best one out of the group. If you want to get any of them, screw Verizon, get T-Mobile if you want growth. I think this company still has a very strong chance of moving even higher than what it is right now. If I wanted to give it an honest price target right now, I would tell you that it could easily move to $200. I think it could easily get to $200 if it continues to move higher. T-Mobile is the champ. Verizon is the discount bargain. AT&T stay away from. Yeah. Okay. MPW. All right. MPW. Then I get to you next, Anthony. MPW. Okay. Medical Property Trust. We covered this one last time, and we talked about you doubling down on it. But this one also made a lower low, lower high, consistent pattern. This is what we discussed last meeting, and because you already invested in it, I said, well, if you thought it was cheap, and I think you said $7 when you got in, you definitely love when it's at $5. And right now it's being pretty stable. And this is what I was talking about, forming that base. I like the bases to form. And to give you a easy explanation of what a base is on the chart, just think of a foundation. That's it. Once you have a solid foundation, you can build upon that. And that is what a base is when it comes to technical analysis, reading a chart, whatever you want to call it. That firm base gives you something to stand on. Right now, I think this is forming that base in order to help buck the trend. If we zoom in, we're on a weekly right now. If we zoom in right now, we can see that we've had consistency around this $5 area. We haven't started to trail lower. We've held our ground. I think this is a pretty decent entry around this $5 area still. Weekly looks good for the base. Monthly right now also shows the same signals right now. In addition to that, we have what's called the spinning top formation, which is indecision, and that's showing a war going on between both the bulls and the bears, and they are showing that they think that the price is too low at this point. And I agree. We can look back as far as once more right here, this $4 area. We can see before, when it was in this area, it did make a strong bounce and get to around that's around $10 or so. So because of that, what do you think I'm thinking? $10. I think that it can return back to $10 over due time from this price. So MPW right now is still a pretty solid entry around this $5 area. And if you're talking about getting to $10, simple math is that's a $5 increase, which is a 100% return if it does get to $10 from there. So that's a pretty decent entry to get a return. All right, IONQ. What do we got with INOQ? IONQ. Ionic, right? That's what it is. Okay. Ooh, all right. This ain't too bad. So we got 3 years of data right now. This is a fairly new stock, IPO'd in 2020. Oh, 2021, I meant to say. All right, 2021. So when we first started with this, we talked about the cup and handle pattern. Cup and handle is a bullish continuation signal, or a bullish continuation signal, not a reversal. And what I see right now is that same formation. We got our cup, we got our handle, and we have a rebound happening right now. We want to see a strong close above 20. Right now, if we do have that close above 20, we have a chance of moving to around $35 or so, which is almost a record high right here. So I like what I see here. I would like to play this out for a solid move once it closes above 20. There's two types of approaches you can do for this. If you want to play the technical aspect of it, you wait for the close above 20. If you want to take the aggressive aspect of it, then you would have been in around $10 or so. And you can still get in, even at $13.76, you still have what I call from your entry point to the floor, which is about $4, right? $10 is where you could have got in. $13.76 is where it's at right now. So buying right now, you have a risk of $3.76 for it to fall, and you would make a decision at that point. But that's how I like to judge stocks. I like to try to get in as best as possible to the support areas, so it gives me defense, so my price has a really good standing chance of actually making some money. If you are new to investing, and this isn't going to be directed to anybody that's in the chat right now, but for anybody who ends up watching this video after the fact, if you're new to investing, the easiest way is just to get started. What I do right now is not so much advanced, as far as what we're talking about, but this is the next level. Just getting involved in the market right now is the best way for you to learn, period. You have to get involved. Once you get involved, your appetite will grow. You will feed that appetite, and then that's when you start to step up in order to learn more about exactly what I'm talking about. So follow me, and I will show you how to do that, and I do it with simplicity. But your charge to the game, or entry to the game, is just learning, period. Get invested. Get invested. And a simple way to do that is just look at products that you currently buy, and you can likely buy stock in that product. I'm trying to look at something right now that I got. Okay, just period. My phone, right? Phone. Android. Android is owned by who? Google. Okay, Google owns YouTube. Google owns YouTube TV. Google owns Google. All these companies are a conglomerate of what they do. Gmail, they are, you see, they're listening to me right now. I just talked about it, and then it was like, here's what I found. Regardless of that, They own a lot. And this is a company that you can obviously make money off of because they are a stock and you can grow with them. And you can be part owner of Google. So the ticker is GOOGL. There are actually two. It's called a Class A and a Class C. It's just a voting privilege that you have, whichever one you choose, Class A or Class C. Class A is GOOGL. Class A is GOOG. And either one you can get involved in and be part owner of Google, YouTube, whatever you want to call it. You can be a part of that. This is how you can easily start. This phone right here, or if you had an Apple, that's AAPL, and everybody's heard of that. You can either be a product owner or you can be a part company owner. And speaking of Apple, you can take a look at what the stock is right now for everything that you ever bought from Apple, iPods, whatever the hell, whatever they got. I don't know. Everything, right? I'm not an Apple guy, so I can't tell you what they got. But iMacs, whatever. This is the price of the stock, $189.43. I guarantee you right now you spent more on Apple than that price right there. So there's really no excuse for anybody for why they cannot get a share of Apple in their portfolio just to have it. And you can be growing with it. Keep in mind, they also give a dividend, which means they pay you quarterly. So for that $189.43, you'd be making a dividend every single quarter for you being an owner of it. So no excuses. We don't accept them anymore. You have all the technology in your hand right now for whatever you want to know, whatever piece of information you ever wanted to know, you can simply just ask and it will give it to you. So we have no more excuses. Get involved. All right. You want to buy more of IONQ. So you say, what's the next entry point? Bet, I got you. So let's go ahead and return to that. That's a very good question. So if you miss the entry point around the $10 area, right? Next entry point right now is we're going to look at the chart. And we're going to see where did the candles start to meet at. And that's going to be your best entry point. One thing that I found out and no one told me about is candles tend to close and open in the same exact areas. And all I am doing is I am looking for where those areas are consistent. Once I have that, then that gives me a very good chance of making money. So I'm going to just click one time. Now you see my line. My line is going to try to find that best point of entry here. So I'm going to go back and I'm going to look back here in this area. And I'm going to see if I've had any consistency in that area. We got 1, 2, 3 candles. And we have 4 and 5. So the next best area would be around 15, and then we're at 1376. So with all that being said, we have a pretty decent chance right now of having entry at 1376. This is not bad whatsoever. Just understand that if it does fall, that you can fall $3.76. And remember, I'm rounding at 10. It's not anything specific. But around that price is where you would obviously like to get more at as much as possible. But at 1376, this is not a bad entry whatsoever. You're only about $4 away from the absolute best entry. So that's a risk that's worth the reward, because remember, you have a move to $20 that is in your horizon right now. And that's all good, because $20 from 1376 is $6 pretty much. So you're risking $4 to make $6. That's how I look at stocks every single time. That number has to make sense for me to make money, and I think that's a very worthy entry. So 1376 right now, it's not bad at all. If you have the opportunity to grab more at 10, definitely do so. I just did my podcast, and I haven't done my podcast basically since October, right? And when I say I haven't done it since October, that just means that I haven't released one since October. I got episodes right now that just haven't been released. I just haven't released anything since October. Number one, I got hacked. My website got hacked, so it took a little bit of time. Maybe about a couple, maybe 3 or 4 days before I finally got that back up. So it took the wind out of me. 2, I went on vacation, my second one of the year. And then I came back and just, sometimes you just come back and you're just not as recharged as you thought you would like to be. And struggled a while to finally get into it. Then honestly, I became uninspired just to do a couple of things. And here I am now. So I finally just got an episode out just yesterday. And I'll get back onto the track of things. So I have another one scheduled to come out on Friday. So, but on that podcast that I just did, the stock that I had picked on that one was Roku. Roku is what I selected when I recorded it on Sunday. So let's see how it performed. Right now it's up almost 1%. The reason why I selected this stock is because we have a technical breakout called a triangle. A triangle is a very simple technical breakout. Just understand that when you have a ceiling and you have something that is constantly getting closer and closer to the ceiling, that chances are it will go through the ceiling. That's the easiest way to explain what a triangle is. Ceiling, something constantly building up pressure, getting to the top of that before it breaks out of that ceiling. And when it does, it usually does with force. It is going to do it very, very strongly. And that is why I picked Roku on the podcast, and that's why I'm talking about it right now. And then on top of that, we see that we close above 100, and we see once again strong volatility in this area. If we look in the past, we see strong volatility in this area, and then we see the same strong volatility in this area. Very large candles have happened in this very same range from 100 to around 150 to 160. So what is my price target? 150 to 160. That's how easy this is. This does not take you long whatsoever. I ran through that, and the only reason why it took me about a minute is because I was running my mouth. If I did not say a thing, I could have been able to easily identify that on the chart just looking at it. And you can get to that point very quickly. I think anybody can read a chart. It's just about how you discipline yourself to do it. So I like Roku for that reason alone. A technical breakout, a very good chance right now. 100 was the best area to get in order to take advantage of this technical breakout. But even at 104 right now, once again, we're looking at how far can we go, where are we at right now, comparison to the bottom. If 100 is near our bottom, we're at 104, so we're almost $5 away from that floor. That's a $5 risk to make $45, because 150 is the minimum price target that I'm looking at. That's a very good price reward ratio, or risk reward ratio. So I like that for that reason. That's why I picked it. All right, I'm checking it out right now. Here we go. Yeah, you got in there $4. That's what's up. Yeah, I do think, like I said, 13 right now is a decent entry. If you got in around $4, that's obviously going to make your average price go up. And you can be patient enough in order to wait for 9 and do that. But for anybody who has missed that opportunity and didn't get in at $4, 13 right now is still good, because you still have a chance right now for it to ride to 20. So I think that's a decent entry. But at $4 right now, you definitely be making your average price go up. And that's something that you would have to consider for what you want for your return. SCHD. Oh, so you playing the options. All right, brother. I like options. I do. Don't get me wrong. This could be a whole nother discussion here. All right, so SCHD. Yeah, this one is not, I mean, it is held on very, very strong. we have a technical opportunity right now for it to move higher. And the reason why we do that is because when you're looking at things, let me rewind it back. Technically speaking, this chart looks very good. One thing I've taught my daughters on how to read charts. The first thing you need to look for, the number one thing you need to look for is there an uptrend or is there a downtrend? Is there an uptrend or is there a downtrend? That's the first thing you need to look for anytime you look for a chart. Left to right. Does it go up like this? Or does it go down like this? Make that determination. All right. And you can do that visually very, very quickly. It takes less than 2 seconds for you to look at it and be like, all right, I like that. I don't like it. Once you make the determination that you do like it and it's warranted your attention, then that's when you start to dig a little bit more. And this chart right now is looking like it wants to continue to move higher. We got a technical bounce off of its 50-day moving average. 50-day moving average right now is also showing here the same thing, just like it did before. And the last time it bounced off of that, it made a strong move. So I'm looking for that to continue. And this is going to likely be an ascending triangle pattern, which we just talked about triangles. That is another strong formation for a bullish move to the upside. So I do like this right now. The solid entry was closer to 70. Right now we're almost $5 off from that. So we're taking a look at where could we go. 80 right now is showing that it is the current ceiling. So we're only $5 away from there. So we're like wedged right in the middle of this. So $5 reward, $5 risk. You weigh your options at that point. I have preferences. You may have your own preferences as well. But I want to highlight where it's at right now, and you would make your decision based upon that if you're willing to take that risk. It's right dead stab in the middle, smack in the middle for where it could go, but I'm also calling for it to go higher. So if I'm looking at this to go higher, here's how I check out for where it could go to go higher out of this pattern. We look at last time what that bounce was, right? Stocks are very, very predictive in the fact that they like to move in the same ranges consistently. They're very repetitive. And you can look at the price action of a stock and you can be able to make that judgment because stocks are human. Stocks are very, very human. Everything you see on here is just pure emotion. And if you know anything about emotional human people, they're very predictive. And because of that, we can look at the past and make these quick assessments in order to make some money. I'm looking at this bounce right here, and we see it's pretty much off of $50, and then it moved to, let's just say 80. Okay, so from 50 to 80 is the simple math is $30. $30 is the simple math off of that. From 50 to 80. Last time the 50-day moving average was around here was around almost $50, and then we got to 80. Remember, I'm rounding. I'm not getting absolutes right now. We got to round. 50 to 80 is $30. So what do you think I'm going to say is going to be the price target now that we're bouncing off of the 50-day moving average once more? Another $30. So $30 from pretty much, we'll say $70 is a price target of $100. That's how I look at things. That's how I make it very, very simple. That's what I'm teaching you. This is not hard at all. So $100 is the absolute price target that this could run up to if this wants to keep moving higher off this 50-day moving average. How I know it's going to get to 100 will be dependent upon if it closes above the record high. That close above the record high is going to be the signal that it would likely move higher, and that's why I say 100 would be the price target if it does get out of that range. So look for that close above that. All right. I got no other stocks really to cover for tonight. So if you got any other stocks right now, you can throw them in the chat and we'll talk about them. But if not, we'll conclude. And I will have to make sure I figure out. As a matter of fact, Anthony, I have to talk with you because you do YouTube lives way more than I do. And you can show me how to share this and do this the right way. Like I said, I got the setup. I got no problem with that. That's the easy part. I just never really done lives before. The only other live I did before was also a bad one because my audio didn't come on, and that's when I didn't have all the stuff set up right. But now that I've got that part done, I just can't figure out how to share it at all. But we did our live, and shout out to the mommy trader. We did our live then, and unfortunately the audio did not come through. But yeah, I'll get with you later, brother, so you can school me on how to do this live stuff. Oh, and shout out to you, Matt, for the suggestion. I'm gonna give you flowers to you right now. You're the one who came up with the idea of moving this way, and I appreciate you for shooting that my way. And here we are. The next one will be better. I promise you. This only way is up from the ground. So thank you again for that, making that suggestion, and I'll build upon that. I'll definitely attempt to do this in person. Next year is going to be the time where I challenge myself to step outside a little bit more. I'm in a hotel right now. I'm out, but I need to do a little bit more. So I'm going to look to do this more locally first. I'm going to build up, and then from there I'll take my way out. But I need to step outside a little bit more, out of my comfort zone, and do this. So I'll be doing more of these broadcasts, but next time it will likely be an audience around other than me just talking, and doing live Q&A at that point in time and building. So next year, 2024, I'll be looking to do this just more often, more in the setting of almost a classroom. All right, so if we got no other stocks really to talk about, I'm trying to think if I can get any more gems to you right now. Nah, I can't really think of anything else right now as far as stocks that are off to the races. Just look for the market to make a move higher. That's all I'm saying. Christmas rally, I think, is in. I think we can make a push. And once we get the Russell involved, which is the small caps, the stocks will really take off. Some people will say they're overvalued. I don't make those judgments. I just look at the chart. Chart to tell you everything you need to know. That's how I look at it. All right, we got PFLT, a contender coming into here. Let's see what PFLT looks like. Let's see, Pennant Park, floatingratecap.com. I can't say I really like this one too much. Only reason why I can say that is because first thing I did is I looked at the chart left to right. Once I did that, I looked at it and saw that the price has been fairly steady in between same price ranges, right? If you want to play this in order to get a dividend, that's not a bad look. Dividend is roughly 10 cents, right? So if we look at that 10 cents out of almost $10, that's going to be 40 cents on a year. And then you look at 40 cents on a year out of $10, then we have, what yield is that? I'm blanking out on my math right now. Yeah, pretty much a 4% yield, right? So I don't know why I didn't come up with that number. But yeah, we got about a 4% yield. That's not bad at all. You got savings accounts right now that are giving you about a 4% yield. Then you have appreciation opportunity for it to get to 15 or 14. It's not that bad, but I still don't like it personally. That's only because I don't really like range-bound stocks like that. So, but it's not a bad entry right now. Closer to $10 is not too bad. You can see in the past, it's bounced off of that $10 area, and we're sitting around there now. So that's not bad at all. Plus, you have a dividend coming in, so at least you're making something while it's sitting there churning. And a 4% yield is better than no percent yield. So I take that as a decent stock. But me personally, I don't like it personally though. $10.25 monthly. All right, that's about a solid hour right there. So next month, look for this to be better. Anybody who catches this after the fact, make sure you hit subscribe. I do this every single month. This very same analysis where we get together and we talk about it. We talk about different stocks. We do that every single month. Make sure you check out the podcast and check me out weekly here, because every week we also look at the market and we look for best entries and we look for ways to protect our money. So all of this is done in order to help you learn how to read charts and do it easily, do it quickly. It does not have to take you much time at all. I spent hours and hours and hours, like I have 10,000 hours plus in. That's why I got to where I'm at now, but you don't need to get there. There's no need to have the information that I have. I just happen to do it because I absolutely love it. That's why I have it. But this isn't anything that anybody needs to do in order to make money. Please don't think that it takes this level of obsession to do it. I'm showing you the very easy Cliff Notes ways to do it, so you can get at least the minimum out of it, so you learn how not to get burned. Whatever you do with that after that, take that and run with it, or just leave it alone as it is. Either one will work for you with that small base. All right, so thank you again for coming out tonight. Thank you for everybody who gave me commentary, gave me stocks to look at. I'll check you next time. Enjoy yourself. Thank you again for your time, and I will see you next time. Good night.